Analysis for Capex, Finance section of CFO 100. In this lecture, you can learn the analysis for Capex. It is usually a large expenditure for the company. CFO needs to check and assess large expenditure carefully. In the beginning of the analysis, it is necessary to identify the nature of the expenditure. When you buy a large fixed asset, you may assume it is Capex. However, even though it is a purchase of facilities, not all expenditure has the nature of Capex. That's why you learn the difference between two categories of expenditure correctly. Below the table, you will find the two categories of expenditure. The category A expenditure is to acquire the asset to generate new and additional economic value. For example, the main production machine asset in a factory, facility to speed up production, the facility to reduce the usage of energy or cost. That equipment has the nature of Capex. It is aligned with your image. For accounting treatment, you record the expenditure as an asset in the books of account and depreciate their value year by year. In terms of handling perspective, assessment for economic value is needed using IRR and NPV methodology. You should not depend on the self-subjective impression to decide a large expenditure. Due to the nature of the Capex, the new asset needs assessment from the legal perspective and the environmental perspective and other points when you acquire such new asset. On the other hand, there is category B expenditure. It is for maintenance purpose to keep the performance of the facility. As the small maintenance parts to replace year by year, it is easy for you to judge as a maintenance cost. But the amount is not the decisive factor for decision. Even though the amount is very huge, it can be regarded as a maintenance cost depending on the nature. We call it OPEX nature expenditure in other words. Category B expenditure should be included in the annual plan correctly because as it is one-shot expense having that direct impact on P&L. As a routine expenditure, it is easy to refer to past experience and treatment, but especially for new expenditures, CFO asks the accounting team and the finance team for proper treatment. In the next slide, you can see the basic way of analyzing Capex expenditure, and then you can learn the main discussion points for maintenance cost having a nature of OPEX. As the CFO, you need to understand the standard methodology of analysis for Capex. For decision-making for Capex, CFO needs to consider a reasonableness of the expenditure using NPV and IRR method. This lecture will not explain the detail of IRR and NPV methods because you have already learned the items in your professional career. But you can see the table below. It is showing an example model of a solar panel to generate the electricity used for its factory and as an assumption 15 years of usage. It can reduce the consumption of energy from the grid and its cost. As you can see in that table, you calculate the expected cash in out as the total of each line item and calculate their net cash in out. Using that numbers, you can calculate the IRR and the NPV generated by that new asset. Apart from those results, each project has an IRR. So, in this example, you can see 6% for project IRR as the entire business of the company, and 16% of the asset IRR, and 6 million NPV for each. When CFO does decision making for large expenditures, this type of analysis is the very standard way. If the new asset's IRR is lower than the project IRR or NPV is a negative number, the cash should not be used for the new asset, because if you pay back that money to shareholders, it is larger return than using it for the new expenditure. From the perspective of decision-making speed, this type of analysis takes time. If you do the same process for every Capex nature expenditure, it's too much burden for the team. So, it is an option to set up a threshold that determines the Capex amount which requires this type of analysis. It is also one of the treatments which CFO needs to pay attention. The important thing is that CFO requires numerical analysis to use the cash of a new Capex expenditure. Though the business team sometimes explain the expenditure only from business meanings and strategy by narrative. CFO introduces the systematic decision-making process based on numerical background. Contrary to the Capex item, there is maintenance cost as OPEX nature of item. It is important to understand the character of maintenance cost because maintenance cost has a direct impact on P&L and cash flow, especially large amounts of expenditure. CFO should carefully discuss proper judgment, influence, and handling. For those points, you can see the details of the discussion points in this slide. Firstly, for judgment, you need to understand the definition of maintenance cost once again here. It has a nature to keep and recover the performance of the existing business and the facilities. It means that it is not generating new function and a new benefit. In other words, it is the expenditure that is not regarded as a fixed asset. As a definition, a fixed asset is the expenditure to generate the future benefit for more than one fiscal year. This definition is helpful to identify maintenance costs from opposite sides. As the second item, you consider the influence of maintenance costs carefully. Maintenance cost has one-shot impact. It has an impact on P&L and retained earnings immediately. In case of the one-shot expense is quite large, it makes a huge loss in that fiscal year and it may have an impact on retained earnings, and then an impact on financial covenants of loans. Dividend and the variance analysis in the budget may have an impact on that treatment. Even if your first impression of the expenditure is Capex or OPEX, it is recommended to consider those impacts once again because you may need to special judgment or adjustment about the recognition after thinking about the impact on those critical points. Especially for new and large expenditures, it is better to discuss with your auditor because that mistake of recognition has distortion of the financials at the last moment of the audit. Thirdly, handling maintenance cost is one of the important aspects. In general, this is no discussion point to decide whether to pay or not, because it is necessary to continue the operation, needless to say. On the other hand, it is important to pass a proper approval process for the payment, though it is planned and inevitable. In addition to that, it is needed to check if the price of procurement is in a reasonable range and if the purchasing department is properly doing a competitive bid to vendors. Because it is a routine activity at the company, the expenditures are sometimes not assessed properly and paid for that money to vendors without sufficient competition. So, there may be room to improve the procurement process and the negotiation process for that expenditure. Although an analysis for Capex is a sensitive item that needs more studies, the maintenance cost is also important to judge it properly to control the PL and cash flow impact. The accounting team and the finance team sometimes follow the past treatment and experience automatically, but CFOs should find points that are not considered enough and make them implement proper process and treatment for the expenditure. When you invest in a company, the concept of analysis seems to be the same as analysis for Capex, but this point is covered by another lecture.